Is the curtain closing on the Mag 7? In case you're not sure of what these 7 stocks are, the list is Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. Now, as a group year to date, depending on the day, they're down about 20%, which is nearly double the S&P 500's decline. Like all great things, eventually the curtain comes down and the show comes to a close. Now, I'm not predicting the end of the 7 companies, but rather the excessively high valuations on their stocks that should come down to more reasonable levels. Only at that time would I recommend to buy these companies. Each one of these companies have their own headwinds, and some of them are facing, well, multiple headwinds. Just to give you some idea, starting off with Alphabet, I shall call them Google, for a second time in 8 months, a U.S. judge has labeled Google an illegal monopolist. I want you to also keep in mind that they have also to pay $20 billion a year to Apple to be on the Safari browser default engine. From all that I have read on this case, I do have to side with the judge here. Amazon has been somewhat flying under the radar, but within the next few months, you will hear more about Amazon also maintaining a monopoly as they are accused of using strategies to maintain its dominance. Now, this includes price inflation, overcharging sellers, and stifling competition. The Federal Trade Commission does have a lawsuit against them, which will start ramping up probably within the next few months as a trial scheduled for October 2026. Apple, in addition to headwinds with China and tariffs, well, they have a lawsuit from the United States Department of Justice alleging that it has monopolized the smartphone market and used its dominance to stifle competition. Meta Platforms is fighting right now with the Federal Trade Commission in court, currently after being accused of purchasing Instagram and WhatsApp to fend off competition in the social media arena. This case from the FTC looks a little bit weak to me. I would say there's maybe a 50-50 chance it goes away. But if it doesn't and Meta were to lose, it could cost them 50% of their advertising revenue from Instagram. Microsoft appears to be in the clear from any government lawsuits, I'll say for now, but their forward price earnings ratio is still around 24 to 25 times earnings, and the amount of capital expenditures they have spent on AI will likely cut into their forward earnings. There are also concerns with the lack of innovation in AI and the potential growth prospects. Nvidia, well, this was the company that could do no wrong in 2024. But now people are thought the growth on their earnings could grow 50% for years to come. Well, they've been rather shocked by the 34% decline in the stock from a high around $153 to around $100 a share currently. We have talked about this in the past, but it appears that many companies have over-ordered chips for artificial intelligence have now backed off on buying more going forward. And lastly, Tesla, which just reported earnings and they were terrible earnings. The only thing that saved the stock was Elon Musk came back saying, yes, I'm going to come back and work more on Tesla, less with the government. That didn't make the stock rebound, but it has seen its stock drop from a high of $480 a share to around $240 per share. Well, that's over a 50% decline and will be hit hard, not only the tariffs, but also declining sales in China. Some U.S. consumers are not happy with what Elon Musk is doing for the government, and that could also weigh on the U.S. sales. This large drop in the Mag 7 reminds me of 25 years ago during the tech boom and bust. Now, if history repeats itself, do not expect to have a 20 to 30% gain at year end if you buy these stocks at these levels. I do believe you will be disappointed, not only over the next 6 to 7 months, but perhaps for for the next few years to come. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and the weekly newsletter for the latest economic news, expert analysis, and market insights.